Hi all and welcome to our weekly report. We have a busy week ahead of us, which starts with UK GDP data release on Monday. Fed's Chair Powell's speech is the main point of interest on Tuesday. RB&Z interest rate decision, UK and also US CPI data is due on Wednesday. China trade balance, Eurozone GDP and US retail sales data are all due on Thursday, ahead of UK Parliament vote on Brexit in the evening. The week will finish on Friday with China CPI and also UK retail sales. Now, let's take a look at few markets. This is the daily price action for sterling dollar or cable. The key level to watch is at 1.29 level. The price action pulled back from the highs due to the recent volatility and as a reaction to the Brexit news. Bulls appear to be in control from the intraday point of view ahead of that 1.29, and if we see a potential spike higher from that initial downside support, any further upside moves are initially capped by 1.30, breakout above that level, possibly 1.31, which is the level where the price would meet this falling resistance trend line. Only a confirmed breakout and the end of day close above 1.31 in the same way as it happened here could potentially open up the way for the move higher towards additional resistances towards 1.32, possibly even 1.33 on the upside. So basically that will be a bullish or a positive reaction in sterling. Alternatively, if we see a continuous US dollar strength and the end of day close in sterling dollar below this very important 1.29 level, then that would potentially open up the way for a deeper retracement towards 1.28, 1.2750, possibly even 1.27 to the downside. This is the daily price action for euro dollar. We are seeing a euro weakness at the moment. Euro dollar is downtrending as indicated by the sequence of these lower highs and represented by this falling resistance trend line. The initial downside is supported by the cluster of these lows, very close to 1.13 level, nice and round number. Any oversold bounce backs from that level are initially capped by resistance at 1.1360. Breakout above that level would open up the way for the retest of 1.14, nice and round number. Breakout above that level could potentially open up the way for the retest of 1.1440 resistance. Alternatively, either a spike into any of these resistance levels and rejection from there, or the loss of these current lows at 1.13 and the end of day close below that level would appear to be quite bearish, potentially opening up the way for a deeper retracement towards 1.1270, possibly even 1.1220, 1.12 even figure. This brings us nicely to euro sterling, because we looked at sterling dollar, euro dollar. Now euro sterling appears to be bearish at the moment. The current daily price action here appears to be creating a rising wedge, which is normally considered to be a bearish continuation pattern if it's found in a clearly defined downtrends. Euro sterling is actually going sideways at the moment, so it's not a clear cut about the downtrend, but we are seeing some selling pressure as a result of this price action here. Now, the key level for us to watch from euro sterling point of view is at spot 88, spot 88. 15 to the upside. Bears appear to be in control below that level, potentially targeting initial downside support towards this current lows at spot 86.20, spot 86 even. The daily close below that level would be a very significant trigger that could potentially incentivize bears to engage again, because these areas, spot 86, 20, 86, significant weekly and monthly lows. So the daily close below that level could appear to be favoring the bears, potentially opening up the way for a deeper retracement towards spot 85, possibly even 84, 83.40 to the downside over the medium term. Alternatively, sterling weakness as a result of some Brexit news, or maybe a reaction to the UK data, or maybe euro currency strength. We could see a breakout higher, the daily close above spot 88 or spot 88.15 on the upside would negate the existence of this a rising wedge and potentially open up the move higher towards 89.50, possibly spot 90 to the upside. Gold in end of day time frame is uptrending quite nicely, as represented by the sequence of these higher lows and a couple of these rising support trend lines. The key level to watch to the downside is at 1300, followed by 1296, a major support to the downside. The current price action looked like a consolidation, which is normally seen as a bullish continuation pattern if it's found in a clearly defined uptrends. And this could potentially indicate that we could see a breakout higher, as long as this rising support trend line holds and this previous resistance level, which is now retested from above as a newly found support. So the key level 1300, 1296. Bullish above that, potentially looking to retest the current highs at 1322. Only a breakout and end of day close above 1322 resistance could open up the way for additional strength and a move higher, possibly testing even 1343, 1350, 1360 would be a more significant resistance areas over a longer period of time. The alternative is only a daily close below 1296 would negate the current bullish sentiment, potentially targeting deeper downside support towards these cluster of the lows at 1279, 1280. So that would negate the bullish outcome. Now, this is Wall Street. Wall Street appears to be breaking out above this falling resistance trend line, and we had a fairly significant and interesting development in end of day time frame. The combination of this four candles is evening star reversal. So we have a green candle followed by spinning top or a doji here, followed by a red candle, which is the same or similar size as this one. They normally indicate some profit taking. And then on Friday we have a candle which finished as a hanging man candle. So there's a buying pressure, basically a breakout and a retest of that resistance, previous resistance, now newly found support. So the key level for US equity bulls is at 24,900. That support level must hold in order for them to potentially attempt to move higher towards 25,380, 25,400, which is the current swing high. Only a breakout above that level could potentially target 25,660, possibly even 26,000 over a long period of time. Alternatively, a flush lower and end of day close below this previous resistance trend line, now newly found support, and the cluster of these previous lows at 24,900, and retest of that level from underneath as a newly found resistance could open up the way for a deeper retracement, a deeper, more meaningful corrective move from the overextended market conditions towards 24,730, possibly even 24,440, 24,400 to the downside. Lastly, let's talk about FTSE. FTSE appears to be bullish. It's reacting as a bullish breakout above this falling resistance trend line, which was signifying and confirming the downtrend in UK equities. The key level for us to watch is at 70.60, so 7,060. level. That's the important downside support. As long as the daily price action stays above that level and bulls return to defend it, potentially we could see a spike higher and another attempt at the breakout above these current highs here at 7190, 7200. Breakouts above that level, end of day close, possibly even retest from above as a newly found support, could target additional resistance towards 72.65. Some of the more bullish traders are possibly looking for a spike higher towards this swing lows here and this swing high towards 7,500 over a longer period of time. Alternatively, some negativity returning as a result of Brexit news or maybe reaction to UK data, and a flush lower, the confirmed loss of 7,060 and end of day close below that level could appear to be a little bit bearish, potentially targeting additional downside support towards 7,000, which is nice and round number, 6,960, 6,950 to the downside. Thank you for watching. Thank you for listening. Stay safe and happy trading. Talk to you soon. Bye for now.